Welcome to the FX Smart channel. In today's video, we're going to walk you through how to effortlessly identify support and resistance levels, along with some advanced techniques that can elevate your trading skills. We're back in action and have a lot of new content lined up, so be sure to subscribe and enable notifications to stay updated on our latest releases. One of the most common questions we receive is about identifying support and resistance levels. Let us know in the comments what other topics you'd like us to cover, and we'll do our best to create videos on those subjects. Let's start with the basics. What exactly are support and resistance levels? Support and resistance are areas where the price has reacted in the past and might potentially react again in the future. Why is it important to mark these levels? By identifying and marking these levels in advance, you can prepare for potential trade opportunities when the price revisits these zones. Having these levels on your chart serves as a reminder to stay alert for possible trades. There is specific criteria we look for in order to identify support or resistance levels, which we are going to list for you right now. We identify the highest and lowest points that the price has reached recently, focusing on the extreme swing highs and lows. We tend to focus on areas where the price has been rejected multiple times. The more rejections, the stronger the level. We aim for levels that are immediately noticeable, ones that stand out clearly when you look at the chart. This means the level should be so evident that it catches your eye right away. The move away from the area was drastic. The level has been respected as both support and resistance, indicating it has held strong from both directions. The level has been respected or formed recently, making it particularly significant. While not all the criteria need to be met for a level to be considered support or resistance, the more criteria a level meets, the stronger it is. Let's dive into the charts and examine each of these characteristics in detail. We'll go through each trait we mentioned and explore them more thoroughly on the charts. Starting with the first trait that qualifies a level of support and resistance: extreme swing highs and swing lows. These are the highest and lowest points that price has reached in recent times. If you look to the left, you'll notice the price rose to a point, hit it, and then reversed. This is the highest point the price reached, making it an extreme swing high. Similarly, at the bottom, the price fell to a point, hit it, and then reversed. This is the lowest point the price reached recently, making it a support level. As always, we don't jump into trades blindly regardless of how high or low the price is. We always wait for price action. The second trait that qualifies a level as support or resistance is multiple rejections. The more rejections, the stronger the level. For example, if the price drops to a particular area multiple times and each time it reverses, this indicates a support level. If the price hits this area on 4 different occasions and reverses each time, it gives us 4 rejections and confirms the level as support. Multiple rejections show that the price reacted to this level multiple times, meaning traders consistently took action at this level. Trait number 3 is crucial. The level should be obvious, meaning it should jump right out at you and be easily noticeable. For instance, on the pound-yen chart, you can see the very obvious levels where the price came up, hit, and reversed, giving us a clear level of resistance. It's immediately apparent and easy to spot. Similarly, along the bottom, the price came down, hit, and reversed, marking an obvious support level. In contrast, there are minor levels that are not as obvious. For example, on the left side of the chart, there are minor levels that are harder to spot. These minor levels can be useful for intraday trading, which we will cover in a future video, but for now, focus on the clear, obvious levels. The more apparent a level is, the more likely it is that other traders will notice it too, increasing the probability that significant trading activity will occur at these levels, such as opening or closing positions. Trait number 4, the move away from the level was drastic and significant. This means we're not just looking for a small bounce, but a substantial reversal. For example, in this area, the price moved away from the level dramatically, indicating a strong support level. Similarly, here, the price again moved away from the area significantly, marking another key level. At the top, each time the price reached this point, it reversed sharply, establishing another significant level of resistance. Trait number 5, the level has acted as both support and resistance. Each time the price reached this support level, it reversed until it eventually broke through. Once it broke, the level turned into resistance. When the price came back up to this level, it hit and reversed again, demonstrating that this level served as both support and resistance. Trait number 6, recently respected or recently created, meaning traders took action at the level in a recent time period. We have 3 rejections of this area of resistance, indicating its validity in the current market context. If you look further back, there's also a swing high, but the recent rejections are more effective because they are current and relevant. Now, before we continue, if you are enjoying this video and want us to keep making more videos week after week, please hit the thumbs up button and leave some comments below to show your support. Let us know your thoughts and what kind of other videos you want to see, and we'll do our best to make them. If you're looking for a reliable and reputable broker with a proven track record, Hanka is your best choice. This broker has been active in the financial markets for many years. Let's take a look at the Hanka online platform. This platform will astonish you. You have access to a wide range of indicators and all the analytical tools you need. One of the remarkable features of this platform is its amazing indicators. You can add any number of indicators to your charts without any limitations. If you want to check important news and reports, you can easily access them here without having to scour other websites for market news and report release times. You can conveniently set up multiple alerts on various symbols and not worry about missing opportunities. Access to your account is easy, allowing you to manage your positions effortlessly. You can use this platform on both mobile and Windows devices. It's an amazing platform with a plethora of features and incredible tools. Don't miss out on this opportunity. Join this broker today and enjoy trading. I've provided the registration link in the description. Now that you know what criteria to look for, let's put it all together and apply what we just showed you and start plotting all the support and resistance levels right on the charts. As a reminder, you don't need all the criteria we listed to define a level as support or resistance, but the more criteria the level fulfills, the stronger the level will be. Starting from the very top, we identify a level where the price came up, hit, and reversed. We draw this level in. Let's break down why this is a good level based on the criteria we listed earlier. 1. This level represents the extreme swing high, which means it is the highest point that the price has reached recently. 2. The level is obvious and jumps right out at you, easily noticeable within seconds. 3. The move away from this level was drastic, as the price reversed significantly after reaching it. 4. There were multiple rejections at this level. If you look closely, there were 3 smaller rejections, forming what you can call a triple top. Moving on down, the next level we identify has 6 rejections: rejection 1, rejection 2, rejection 3, rejection 4, rejection 5, and rejection 6. Let's analyze why this is a strong level based on our criteria. 1. There are multiple rejections at this level, with a total of 6 rejections. 2. This level has acted as both support and resistance. 3. The level was recently respected, making it still valid in the current time period. 4. The moves away from this area are drastic. 5. The level is fairly obvious, as you should have been able to see the reversals from this area very quickly. Moving on down, we spot the 3 rejections here and draw in another level. What criteria does this level have that makes it a good level of support? 1. It is the extreme swing low, meaning the lowest point price has reached in recent time. 2. There were multiple rejections of this level, 3 in total. 3. The move away was drastic because, as you can see, the price reversed significantly when it got here. 4. The level is obvious, as you should have easily spotted it when looking at the chart. 5. It was recently respected and occurred in a recent time period. There are other minor levels in between, but for this video we want to keep things simple and focus on the key levels first. Just drawing in support and resistance levels does not mean you take trades blindly. Once the price gets to these levels, you always need to wait and look for price action patterns. Let's do this again on another pair. Here's the euro to dollar. Starting from the top, we notice this level here where the price came up, hit, and reversed from, so we draw it in. What criteria does this level satisfy? 1. It is the extreme swing high. 2. The move away was drastic. 3. The level is obvious. Moving on down to the left, we notice this level here where the price came up, hit, and reversed from, so we draw it in. The criteria that this level satisfies is that the move away was drastic and the level is obvious. Moving on down to the right, we spot this level here where the price came up, hit, and reversed from, so we draw it in. The criteria that this level satisfies is that the move away was drastic and the level is obvious. Moving on down, we spot this next level here, so we draw it in. This is a very key level because it encompasses a lot of the criteria we like to see. The more traits a level has, the better. This level satisfies 1. Multiple rejections. 2. The level acted as both support and resistance. 3. The move away was drastic. 4. The level is obvious. Moving on down to our final level, we notice this level here where the price came down, hit, and reversed from, so we draw it in. What criteria does this level satisfy? 1. It is the extreme swing low. 2. There's more than one rejection, 2 in total. 3. The move away was drastic. 4. The level is obvious. 5. It is recent, meaning it was respected in a recent time period. How to draw support and resistance lines and zones. Here is the euro to dollar. Along the top, you should be able to spot this key level of resistance here. The concept we're about to show you also helps solve another debate that most traders have, which is, do you draw in lines at the candle closes or do you draw your lines in through the candle wicks? There are 3 ways to draw in your lines for this top level here. The first way would be to draw in a single solid line, which works well when you can get all the reversal points touching the line. The second way would be to draw in multiple lines to accommodate for all the candle closes, but the problem with this method is that it is messy, which can end up confusing you as a trader, and is also why we always want to keep our charts as clean as possible. This brings us to our preferred method, which is drawing in zones like this. This way it accommodates for the entire area, encompassing both candle closes and wicks. The most important point to remember is that it doesn't matter whether you draw in lines or zones. Either one works because you still treat these lines and zones of support and resistance as areas, meaning you are looking for price action to occur in the general area, not at a solid number, line, or zone. Moving on down, we spot this level here and we draw in a zone like this. You are probably wondering why we did not accommodate for this point here. Here's a pro tip: don't draw in massive zones. Draw in a smaller zone that accommodates the most amount of touches and points. Drawing a big zone to accommodate for this low would look terrible and confuse you with such a large area. Instead, opt to create a smaller level that accommodates the most levels it can touch, and then this point here would be deemed a false breakout. We will dive deeper into false breakouts in another video, but the name is self-explanatory because you see this big momentum candle that breaks through support and assume that it will continue lower, but it ends up reversing drastically, faking out all the short sellers, hence why you see such a big candle that followed the breakout candle. We use time frame confluence to get around false breakouts, but that is something we will discuss in another video. Finally, at the very bottom, you have your swing low, and we just draw on the line. As you can see, you have a nice clean chart with your key levels, not 100 lines. There are other minor levels in between the levels we have drawn, but for the sake of this video, we're keeping it simple. Let's jump to one more example. Here's the CAD JPY. We had a swing high level up top here, and you can draw in a zone to accommodate for the candle closes and wicks. Moving on down, you have this next level here, and again, create a zone to encompass the area. Next, you spot these rejections here, and we choose the zone. Finally, at the bottom, we have the swing low, and again, we draw a zone to cover the entire area. If you enjoyed the video and want us to continue making more videos week after week, make sure to hit the thumbs up button and let us know your thoughts in the comments section. Tell us what kind of topics you want us to cover, and we'll work our best to create more videos for you. Also, if you want more content, follow our Instagram channel to get access to new techniques and strategies. Thanks for watching, and I'll see you in the next episode.